Hello, everybody, and welcome in to this week's episode of the Magnify Wealth Podcast. I'm Cameron Gannon. I'm here with my co-host, Scott Gannon.
Welcome, everybody.
So this week is going to be a bit of a shorter episode and a little bit off our normal topic, but not completely. We like our tax tips here, so this is going to be a little bit of a tax strategy for business owners. Not only vital, but a very easy one to implement for sure. without any expense up front at all. But I do want to put a little disclaimer at the start of this that if you are interested in using this strategy, make sure you do talk to your accountant and make sure it is set up how it should be for your own personal situation.
Yeah, when you say so the disclaimer truly is that we are not tax attorneys or tax lawyers, tax accountants. Those people can make sure that you are in line with the rules for this program.
Awesome. So what are we actually talking about? It is health spending accounts, or HSAs. A's provide a fixed allowance for employees to spend on eligible health expenses. Okay, it's like a personalized health benefit plan that gives the employee, which can be yourself. That's where we're going to get to.
Owners as well. Yes.
Gives the employee the flexibility to choose how they actually want to spend their benefit dollars.
Yeah, so the HSA is a tax-free benefit for health services you can access, whether it's dental, vision, professional services, chiro, physio, those kind of things, massage therapy, all those neat and wonderful things that always have limits on them with your health plans, and any other eligible expenses granted by the CRA. So there's a wide array of opportunities to use this to your benefit because it's tax-free.
So the way it works in simple terms is the employee pays their health benefits. They go on to a little handy dandy app, and they're actually able to have your business repay them for the health expense. The business pays that to them, and a small fee is taken off. It's tax deductible to the business, and the employee gets that as a tax-free benefit.
Yeah. So in a nutshell, this is it's paperless. So you can run the ones we use anyway. The providers we use, it's all based on, it's right on your phone. Take a picture of a receipt and you upload it. But in the whole, it's essentially a reimbursement. So you pay for the service or the expense personally, and the corporate dollars reimburse you. So, and that can be for the owner and for employees.
So how does this really, really get fun for the business owner? Well, that is what you can actually do is you can allocate a percentage of your salary and designate that as HSA eligible. So there's no actual stated amount at the CRA, a percentage of your salary that you can do, but generally it's about 15% of what you make that can be designated for eligible health spending account costs. This means what you can do is you can basically pay for your health expenses. We're using corporate dollars that are tax deductible to your corporation, and then you get basically a double tax savings because you get a employee benefit as the business owner working in your company.
Tax-free. That's the key. Yeah,
right? That is tax-free.
So just to be clear too, when we say about designating 15%, that doesn't mean that if you're paying yourself, $250,000 or whatever, $250,000, that you have to take 15% and allocate it into some fund somewhere. Like you're still keep your salary the same at $250,000. This 15% is in addition to your income. So this is just a tax-free amount that can be used. Again, it has to be eligible expenses, obviously. And so it's a great example of this is what we see a lot with business owners is when their kids need braces, right? Whatever plan they have, there's always a maximum. So you might run into a $5,000 or $6,000 or $8,000 expense if you don't have any coverage for that for major dental. And this is just a way of saying, okay, if you're in a 50% tax bracket and it's $8,000, well, instead of you having to earn or take out salary as 16 grand, well, you take 8 directly out of the corporation plus the fee. There is an admin fee, but it's all tax deductible. Yeah. So that's a great example I use all the time, and I see it all the time.
And I think you started to mention it too. I don't know if the point kind of came across, but for the business owner themselves, you don't need to fund an account to have this available.
Correct.
What you do is you pay as needed. So if you've you do it for yourself, but if you've set this up for an employee, given them $2,000 of eligible expenses, you don't have to put $2,000 aside. You just have to be ready that if a $2,000 expense gets inputted in, that will be paid from your corporation.
Yeah, in other words, so the money just comes out of the business account on a claims-based basis, what we call that. So if you have I'll use Cameron's example there, a $2,000 benefit for employees, and they use $1,500 of it in a given year, then the corporation will pay the $1,500 plus the admin fee, and that's it. But there is a little more here we're going to talk about in a second about carryovers. But so yeah, that's basically how it is. So so it's a great. Because you're using corporate dollars and they are still deductible, you can give employees additional cash flow without them having to pay any tax on it. Valuable, very valuable recruiting and retention tool for employees. And it doesn't have to be huge. It really doesn't. But yeah, you can have some flexibility, and that's kind of what we're going to roll into next, I think, is how you can structure these things a little bit. And again, there's intricacies to this that you do require to have a conversation about it. But for all intents and purposes, you can have classes of employees, so that, for instance, you could have if you're a larger company, you got C-level executives. You could have like let's say it is 15% of their income, and they're making, say, 100, 200, whatever, $300,000 a year. Suddenly this expense or this benefit could add up to significant tax savings, although it would be a cost for the business. But this is how you retain people. And again, it drops down from there. So for employees or managers or whatever, it doesn't, like the 15% we talk about is a generally accepted number
as a maximum.
That, yeah, exactly. So anything under that, you can have plans for $500, you can have plans for $2,000, you can have plans anywhere in between.
The only consideration you need to make is a certain class of employees, meaning people that do similar jobs, need to have the same amount of benefit, even if they're paid slightly different amounts based on seniority or whatever the case. Their health spending account needs to be equal
the same. Yeah. So if they're a class has to be a class. So you can't give one person more within the class than anybody else. So, and finally, another little added benefit that is a carryover. So, and this, you can not have this for employees or whatever class of employees, or you can offer it. So what that means is, and it's only for 1 year. So if you have, for instance, let's just use a business owner by himself. He's taken, let's just say he's taking $100,000 salary. We'll use simple numbers, $15,000 benefit, and uses 5 in one given year. Well, he can carry forward. He or she can carry that forward and have up to $25,000 the following year. Now, that is only carried forward for 1 year. So if that year they use the whole 25, then they can have 15 the following year. Or if they use, say, 15, then they use the 10 that they carried over. You could still carry, in that example, another 10 forward. Yeah. So if I did the math right in my head there, I just made that up as I was going. So
there'd be another 25 the next year with that math.
But it's kind of like the first in, first out type of thing, idea for the carry forward.
The good thing about these O's are so customizable that, when we do it for you, we give you as much carryover possible, as well as we allow you, a full 120 days past the end of the year to submit any receipts you may have forgotten. But when it comes to your employees, you can do that, or you can make that period shorter or non-existent so that you can manage your own cash flow.
Yeah, exactly. Know your cash flow better. And those carry forwards can come in really handy if you have a real expensive emergency that your current health plan or your provincial plan is only partially covers or doesn't cover at all. That can come in really handy. And so that kind of brings me to my personal experience. I've had an HSA or a health plan since I found out about them, probably, I guess, 10, 12 years ago, I guess. I can't even remember how long ago it's been. But back in, and as a lot of my clients know, back in 2022, my daughter got sick. And in 2023, we had to have extended stays in Pittsburgh, as well as Boston. So we spent combined, I guess, or not me personally, my daughter and my wife, although I was there most of the time. I wasn't there the whole time, but I'm trying to think now. It would have been 2 months plus, so over 3 months between the two cities that we spent in the U.S. And a lot of this stuff was covered by the provincial health, but a lot of the travel, there was very limited coverage for that. So that stuff got covered, and my ability to have the HSA available was really valuable. It saved me thousands in tax, and it was a great thing to have, knowing. And frankly, just before we even incurred any of this expense, before we even knew what was going on, I knew in my head that I didn't have to worry about pulling money out of my company and paying tax on it in order to get the best care that my daughter could get, which I wasn't willing to compromise on. Yeah. So, you want to tie it up with just for all the listeners to kind of conclude this. I don't even know if it ended up being a shorter episode, but this health spending account is a great opportunity for incorporated business owners to be able to save a lot of tax and help recruit and retain talent without any upfront costs that to get it in place. We're always here to help you fully understand what it means, but also make sure you talk to your accountant and your lawyer to make sure it works right for you. Yeah, and fill in the blanks. This was simply a podcast to let people know about it, right? We certainly, we do encourage you to seek your accounting advice, and as well as, ideally us, but whoever you deal with. These are great plans if you don't already have one.
All right. Thank you, everybody, for tuning in to the Magnify Wealth podcast. See you all next week.
Take care now.
Thanks for tuning in to the Magnify Wealth podcast with Scott Gannon. Remember to subscribe on YouTube or your favorite podcast platform for more insights on the infinite banking concept. Until next time, remember, immediate action is the most efficient way to achieve your goals.